Thailand just passed a law that would allow crypto traders to pay no tax on their gains for the next 4 years. And with renewed talks of favorable remittance laws, the country is quietly positioning itself once again as a crypto off-ramping hub. So is Southeast Asia's most popular destination becoming the next tax-free haven for your coins? Let's find out. In the next few minutes, I'm going to break down exactly what these laws mean for foreign holders, as well as whether you can practically pay no tax on your profits. And we'll walk you through the risks you should look out for if you plan on investing or moving there, because while Thai laws are pretty relaxed, the way how they play out in practice is usually a completely different story. With that out of the way, let's dive in. Thailand just recently passed a 4-year crypto income tax waiver, and that would apply to all crypto sales made through licensed platforms. It would be for approved exchanges in Thailand, such as BitCub, which is the largest one, Bitaza, or their local version of Binance. Now, the law does specifically state that the exemption only applies to capital gains from trading, so you can't just use these exchanges to off-ramp your coins. You would have to demonstrate that you were actively trading on these Thai exchanges in order to get that tax break. Unfortunately, Thailand is not known for its cybersecurity protocols. As the saying goes, not your keys, not your crypto. Of all the approved exchanges, the only semi-trustworthy one in the country would probably be Binance. What is interesting though, and maybe an indication of what will happen down the line, is that the government recently approved a law that lets foreigners use their crypto from cards linked to centralized exchanges. Now, doesn't appear like much on the surface, but it is an indication that both banks and payment platforms are integrating these crypto rails behind the scenes. And that could lay the groundwork for smoother tax-free crypto exits as long as the Thai government changes and fixes a major issue plaguing expats. You see, one of the biggest inconveniences for foreigners happened in January 2024. Up until then, you could bring in as much money as you wanted into the country from abroad, completely tax-free. But the government changed the laws abruptly and introduced a sweeping remittance tax on all foreign-sourced income. So, just for some context, today, if you would bring in about $56,000, which is 2 million Thai baht, you could get charged up to 30% in taxes. And for anything above $140,000, it goes up to 35%. Now, naturally, a lot of wealthy expats and digital nomads got scared away and they stopped investing. And many of them actually packed their bags because Thailand simply didn't seem like one of those tax-friendly jurisdictions anymore. It seems that the government noticed the capital flight because there's a new proposed amendment backed by both the finance minister and the revenue department that would soften those rules. And if passed, foreign-sourced income would only be taxed at Thai levels 2 years after being made. So for example, if you made your crypto profits in December 2025, you would have until the end of 2027 to bring it into the country tax-free. It's expected to pass this year, and if it does, along with the crypto tax waiver, it would make Thailand once again attractive to those who want to convert their coins into real estate or just simple investments. Now, personally, we believe that Thailand's government is way too bipolar to invest anything long-term or to risk major capital. I mean, the tax environment is way too unpredictable. The laws, they change pretty much overnight. Take real estate. With the vast OTC networks, a lot of crypto holders have chosen to convert it into properties. But here's the problem. Foreigners can't legally own land. They can only lease it. And the only properties that are really available are those cheap condos, say in Phuket. Though they are overpriced and quite bad quality, they're mainly geared towards the Chinese money launderers. But a popular workaround that many foreigners have used is to simply buy property through a Thai company with a nominee shareholder. So you have a local frontman who owns 51% of the shares, and that allows you to buy more desirable land as well as other larger properties. Just recently, Parliament proposed an amendment to the Anti-Money Laundering Act, and that could change everything. If passed, it would mean that the government would be able to seize assets from these companies using the nominee structure to bypass the foreign ownership laws. By the way, they're not just talking about it, it's expected to go into full force starting with next year. So, are things going back to normal in Thailand? Can we finally start plowing our crypto millions into the country once again? Depends on how you look at it. To be fair, for most foreigners, nothing really changed over the past year and a half if you were not buying Thai businesses or real estate. Because for living expenses, which are very cheap in the country, most people, they cash out under the table through OTC desks. And those are littered all across the country. For the cheapest rates, you would go through P2P transactions through a local bank account, but many expats can't get one. So in that case, they use Thai Baht Cash. And since cash is accepted pretty much anywhere, you can use local coin swap for the best rates. It's going to be around 2 to 3%. Or you can also use the official desks such as X.24 or CryptoPeta. It's going to be about 1% more expensive. They did have a little bit of a scuffle back in April when the Thai police raided their offices, but right now everything has been cleared legally. It's perfectly legit. Local tax enforcement is pretty much non-existent due to how deeply corruption runs. A lot of Thai people, they don't pay taxes, they just pay a fine if they ever get caught. In fact, a lot of expats and foreigners don't file their tax returns. The accountants there, sometimes they even say not to bother. They admit that they don't report their rental income. Not exactly wise, but there is a big difference in Thailand. What is said in the law is not how it plays out in practice. And that's what makes it so dangerous for wealthy foreigners, because on the surface, it looks like the laws aren't enforced, the regulations are relaxed, but there are so many bureaucratic landmines that you can step into that the government can spring on you if they deem that you have too much money. For example, the expats that don't file their taxes even though they're residents there, well, right now it works, but technically speaking, you need to get a tax clearance certificate from the Revenue Department in order to leave the country. So if they find out about your wealth, they can literally have the immigration border guards stop you from leaving the country. Another easy crackdown, all of the expats and foreigners that will completely ignore the trading aspect of the crypto tax waiver bill, and they're just going to use it as an excuse to off-ramp their stash into local bank accounts. First off, Thailand is part of the Common Reporting Standard, and there's always a threshold where they start reporting your gains back home. And secondly, even in Thailand, they do flag your transactions for AML reasons if you have 300 large ones in the span of a year across all of your accounts. So essentially, as a wealthy foreigner, you have two options if you want to invest or do business in Thailand. Option one is to try and go along with all the bureaucracy, administration, the ever-changing rules, and you will fail because they're designed to get a corruption fee out of you, not for you to actually follow them. Or B, that's where you do it like the locals. You learn the culture, you get a plug, somebody who is trusted, and they can teach you how business is done, as well as get you out of sticky situations. Because in the West, we're taught to follow the rules, whereas in the East, it's about who you know, not what you know. If you plan on moving to Thailand in the next few years to cash out your crypto gains, first off, do not fall complacent to the system's bad record keeping. It works for Thai individuals, but not for foreigners. And what I mean by that is that many expats, they don't officially deregister from their home country. They move to Thailand. They think that because they've stayed over 180 days over there, they've automatically become a Thai tax resident. And a lot of times they don't file taxes at all. The problem with this is that if you ever decide to leave Thailand and move to, say, a Western country or a developed country, they're usually going to ask you for proof of tax returns, and they don't have their paperwork in order. So don't fall into that trap. Go and get a good accountant in Bangkok who are surprisingly affordable as well as creative and flexible, and they can work with your foreign setup to reduce that tax exposure. By the way, Thailand does not have controlled foreign corporation rules. It doesn't implement the place of effective management test, so you can legally reduce your taxes if the remittance law passes to pretty much zero. Also, we would recommend foreign expats to open a Cambodian multi-currency account as a Plan B option to off-ramp your cryptos. Cambodia is not part of the common reporting standards, which gives you a bit more privacy, and some of the banks, such as Akleda Bank, will open both personal and corporate bank accounts for non-residents. So you can use their pretty good QR system to make payments in Thailand, Vietnam, Laos, without having to open a separate bank account in each of those countries. To wrap it up, Thailand is one of those countries that joins all of these international agreements, such as the Common Reporting Standards and the OECD's Global Minimum Tax Rate, but it doesn't actually have the tools to enforce it properly. Supposedly, by 2028, they're going to also implement the crypto CARF regulations, and we just have to see how it plays out in practice. For now, enjoy the cheaper lifestyle. By all means, the rules are much more relaxed, but know in the back of your head that this is not 10 years ago, when it was a bit more like the Wild West. You were able to live there as a perpetual tourist. If you want to move in larger amounts, either A, you need to know the country very well, have a local plug with connections, or B, do not try all of these fancy loopholes, because if the population ever becomes discontent, it's going to be your Pattaya villa, Mr. Rich Crypto Bro, with a local nominee that's going to be the first on the chopping block. I made a previous video on whether or not Dubai is one of those good jurisdictions to cash out your crypto with no source of funds. Let me know in the comments down below if you enjoy these country-by-country breakdowns. But that's it for today's presentation. I'll be seeing you in the next video, and until then, bye-bye.